Good morning, namaskar, suprabhat, केम छो, वड़क्कम, सत श्री अकाल. So, good morning to all of you. I welcome you all in our second session of TDS Advanced Tax and TCS Provision. I am C. Ankit Sharma, your income tax faculty, and I believe you all must be studying very hard to achieve the goal of life to be a chartered accountant as soon as possible. Okay. So in the last session, we have discussed provision regarding TDS. And as we have discussed that TDS, etc., are a kind of collection of tax. So it is actually the methods or modes of collection of tax, which is actually income tax. So these are the collection of tax modes like TDS, which is based on certain incomes. Then TCS, that is based on certain transaction, and advanced tax, which is based upon your estimated tax liability. And if any tax is left, even after collection of these tax, if anything is due upon an assessee, then he needs to pay that tax at the time of filing of return as self-assessment tax. So out of these four types of collection of tax or modes of tax collection, we were discussing provision regarding TDS concept. In those concepts, we have discussed section 192, that is TDS on salary. Section 193, interest on securities, TDS on interest on securities. We have also gone through section 194A, which is interest other than interest on security. Then some online winning provision we have discussed, section 194C, that is for contract and subcontract. Section 194H, that is commission and brokerage. Then section 194I we have gone through, rent cases. 194IB, 194J. So can anyone tell me the difference between section 194I and 194IB? So before starting today's class, I just wanted to a short recap. I want to ask that anyone wants to can tell me the difference between section 194I and 194IB. Before that, good morning Navneet, good morning Linga, good morning Shraddha, good morning Neeraj. गुड मॉर्निंग नीरज इज आस्किंग सर सेक्शन 194 आई में जो रेंट की लिमिट है वो मंथली ही या एग्रीगेट है. इट इज ऑन मंथली बेसिस. सो इफ रेंट इज एक्सीडिंग 50,000 that you need to deduct TDS monthly. Theosami, good morning. Linga is saying please connect audio. Audio is fine from this side, Linga. There must be issue at your part. Okay, then Lakshmi, good morning. In 194I, Neeraj is saying, in 194I, individual HUF cannot deduct TDS. In 194IB, normal individual HUF can deduct tax at 2%. Miss Tiwari Radheshyam is saying, good morning, good morning. So I want someone to tell in audio mode, not in written mode. I just wanted, do not type in chat box. So if anyone is there who wants to explain the basic difference between section 194I and 194IB. Neeraj wants to tell, so can we unmute Neeraj?
गुड मॉर्निंग सर.
Good morning, good morning.
सर 194 आई के अंदर जितने भी पर्सन्स होते हैं अदर देन इंडिविजुअल एंड एचयूएफ वो डिडक्ट कर सकते हैं टैक्स और उनका रेट रहेगा. अगर प्लांट प्रॉपर्टी एंड इक्विपमेंट के लिए है तो 2% का रहेगा और अगर प्लांट प्रॉपर्टी एंड इक्विपमेंट के अलावा है तो 10% का रहेगा. लेकिन 194 आईवी के अंदर नॉर्मल इंडिविजुअल एचयूएफ जिनका बिजनेस बिजनेस है ही नहीं तो वो लोग भी डिडक्ट कर सकते हैं टैक्स 2% के हिसाब से.
बट व्हाट इज नॉर्मल इंडिविजुअल HUF? देखो हम ना कुछ मिस कर रहे हैं थोड़ा सा. आपने ठीक बताया, वेरी गुड, वेल डन. बट कुछ मिसिंग है. लाइक 194I और IB में जो नॉर्मल इंडिविजुअल HUF आप कह रहे हैं, कैन यू टेल मी द मीनिंग ऑफ नॉर्मल इंडिविजुअल और HUF?
सर नॉर्मल इंडिविजुअल एचयूएफ वो होते हैं जिनका बिजनेस इनकम और प्रोफेशन इनकम. बिजनेस इनकम जो है 1 करोड़ के नीचे हो और प्रोफेशन इनकम 50 लाख से नीचे हो या फिर ये हो ही ना.
ओके, तो वो वाले जाएंगे 194IB में.
यस सर.
और जिनकी आपके हिसाब से जिनकी बिजनेस इनकम 1 करोड़ से ऊपर है और प्रोफेशन के केस में बिजनेस प्रोफेशनल इनकम अगर 50 लाख से ऊपर है वो जाएंगे 194 आई में।
यस सर।
ठीक है, एक तो ये हुआ डिफरेंस। दूसरा डिफरेंस आपने बताया रेट्स का, 2% एंड 10%, एंड आईबी में है 2%।
यस सर।
ठीक है, ओके। एनीवन एल्स वांट टू, एक्चुअली कुछ मुझे रेक्टिफाई करना है आपके आंसर में, बट मैं जानना चाहता हूं इज देयर एनीवन हु कैन actually tell me that what is something is wrong in your whatever you are saying, there's something is wrong, and that could be deduct your marks in the examination when you will write this language. There is something is missing. So I just want to know, can anyone tell me what is the mistake in the explanation given by Mr. Neeraj? Arun is wants to tell. Okay.
Good morning, sir.
Good morning, Arun Sagar.
Sir, actually, Section 194A is applicable to the all as a, persons, except including the individual and HUF whose turnover is more than 1 crore in a business and a profession is 50 lakhs. Normally, sir, TDS is 10% for building and furniture, fittings, and plants. In other case, a plant and equipment 2% going to apply. In Section 194 IB, it applicable for whose income is persons as individual excluding from the section 94 IU means turnover is lesser than profession 50 lakh and one business in 1 crore should be lesser than. If their rent paying more than 50,000 rupees, then TDS is compulsory 2%. It has to be deducted at the end of the financial year 2%. But there is a one condition: rent should not be exceeding the TDS limit.
Correct. Perfect. Perfect. Very good, Arun Sagar. But let me tell you one thing to Neeraj also and to Arun also, and to everyone who is listening it. Like if you are listening what Arun and Neeraj was saying, you will feel that exactly they are correct. Most of whatever they have said, they are correct. But when you are going to write this language in the examination, so there could be deduction of marks because you are using a word. When the income exceeding 1 crore rupees, when the income of a profession exceeding 50 lakh, now income word is net profit. Where are you wrong? It's not income, students. It's receipt of profession exceeding 50 lakh or turnover of business exceeding 1 crore. You understand what is the difference between income word and turnover word? Income, we say that is net profit, like your PGBP. And when we talk about the turnover, that means we are talking about sales. So the limit of 1 crore and 50 lakh, it is not on income. That would be different interpretation of the word income. That is technically the word turnover and receipt. Understand what we are discussing? So you think you are giving the correct answer. You are exactly explaining me the 1 crore 50 lakh correctly. But when you use the word income 1 crore exceeding or professional income exceeding 50 lakh, you are completely wrong at that point. If I'm an examiner, I'm going to cut your marks because this is not the correct answer. So this has happened when we think we are right, but not as per the examination point of view. So the word has been used turnover and receipt. So these kind of small mistakes can deduct TDS into your marks. So please be very specific what you are thinking and what you are writing. That should be according to the provision. So I'm just telling you, these kind of mistakes hurts a lot. When you will come back to home, when you will see that you are not getting the marks what you were expected, and maybe you are asking for your copies, and you will see, oh, I have written down income exceeding 1 crore, but there should be turnover exceeding 1 crore. So please remember these kinds of things. These are very important. So what we are reading, that we should understand what we are saying. Okay. So very good. Section 194I and IB was the difference. So now let me give you an example that what are the kind of different pairs under TDS concept. In the last session, I have asked you that there are 4 or 5 important things in each TDS section: the pair, the pay, the amount limit, the rate of TDS, and there are certain exceptions. So for those 5 points, I have make certain points to make you understand what kind of pair we have included in different section of TDS. So that will remove that problem that you have to remember each section which pair have been included in which section. So section 194A A we have discussed, section 194C, 194H, 194I, 194J, 194R. So in these 6 TDS sections, all payers are included, whether it's an individual, HUF, partnership firm, company, etc. But individual HUF, only those are going to include it. Including mean only those payer can deduct TDS if they are individual HUF in these 5 sections, if their sale exceeding 1 crore or receipt exceeding 50 lakh. So those individual HUF who does not satisfy this criteria cannot deduct TDS under these 6 section of TDS. So these have been explained in every section of TDS separately, but I have combined these points at a one place. So that would be easy for you to understand, okay, in these 6 sections, only individual HUF can deduct TDS as a pair if their turnover exceeding 1 crore or if they are carrying a profession, if the receipts are exceeding 50 lakh rupees in the, remember, preceding previous year, not in the current year. We are talking about preceding previous year. That means 24, 25. Clear? Now, out of these 6 sections, the 3 sections, section 194C, section 194H, and section 194J, and out of section 194J, only professional fees content has been included. There are professional fees, technical fees, royalty, non-compete fees, etc. All have included. But only professional fees if payer as an individual HUF. If payer is an individual HUF who is paying contract or subcontract amount to someone, if he's paying brokerage or commission under section 194H or under section 194J, the transaction regarding professional fees. So if they are individual HUF having less than 1 crore or 50 lakh turnover or receipt, you have seen section 194I, in which those individual HUF has not been included. Those turnover is less than 1 crore or 50 lakh. So for those individual HUF, section 194 IB has been inserted. In the same way, section 194C for section 194H, section 194J, professional fees. So those individual HUF cannot deduct TDS because turnover not exceeding 1 crore, receipt not exceeding 50 lakh under this section. So for these 3 kinds of payment, contract, brokerage commission, and professional fees, if individual HUF is having less than 1 crore turnover or less than 50 lakh rupees receipt, and if TDS has not been deducted under these 3 sections, a new section has been inserted under section 194M. The same way for rental purpose, there was section 194I other than for specified individual HUF. But for those individual HUF, section 194IB has been inserted. In the same way, for these 3 kinds of payment, contract, brokerage commission, and professional fees, for these 3 kind of payment, section 194C, H, and J is there. But they did not include individual HUF less than 50 lakh or 1 crore. So a new section 194M has been inserted, and it says if payer is an individual HUF having less than 1 crore or 50 lakh rupees turnover and receipt, and if they are paying contract fees, if they are paying brokerage commission, if they are paying only professional fees, then TDS would be deducted under section 194M. Understand? Section 194T we will discuss later. In this section only partnership firm has been included as payer. Section 194Q is a special provision. The payer, all payer includes, but under certain circumstances. So these 6 you need to understand that under these 6 sections, individual HUF would not be included if turnover is not more than 1 crore or 50 lakh rupees. But out of these 6 sections, for section 194I, IB has been made. for those individual HUF less than 1 crore 50 lakh, and for C, H, and J, 194M has been inserted. Why I'm explaining this to you? Because we are going to read section 194M now. So you should understand why section 194M is there, because they include that kind of payer which has been escaped under section 194C, H, and J in case of professional fees. I hope you got it. Okay, very good. So before starting our today's section, section 194M, first of all, of course, we are going to have a thought for the day, students, for all of you. And it says, I don't need it to be easy. I need it to be worth it. So easy things, in my opinion, those are easily gettable. Those do not have value in your life. If you that is easy to do graduation, that does not have that importance in your life, which could be as a CA. So CA is worth it. So definitely it's not going to be easy. So whatever is going to be worth in your life, you have to work hard for it. And definitely that won't be easy. So easy things technically not going to worth. And whatever is worth is not going to be easy. So whatever you are doing chartered accountancy course. So it is not easy, of course. So that's why it worth a lot. So from last 3 days, yesterday I was at WOFA, and a very interesting statement was there that somebody says that a very nice faculty, uh, Mr. Anup Soni was there, and he was say a very interesting thing that the signature of CA is not enough in our country. Actually, it is more than enough. So when you sign as a chartered accountant, it is more than enough that anybody will trust it, whatever you are signing at. So that is the importance of being a chartered accountant. When we sign something that's not enough, actually that is more than enough. Okay. So that statement actually I liked a lot. So let's now move on to today's lecture, and we are going to discuss section 194M. So I hope it is clear what section 194M is going to talk about. These are for those kind of payment. Those has not been covered under section 194C, H, and J professional fees. So now you can see payment made by an individual HUF. So what kind of individual HUF it is? It is kind of individual which has been excluded under section 194C, H, and M. And you can see for contract work, that means section 194C, by way of commission, brokerage, section 194H, and only professional services fees, which is included under section 194J. So for technical services, royalty, etc., is still no TDS if payer is individual HUF, less than 1 crore turnover or less than 50 lakh professional receipt. So those kind of payer can deduct TDS under section 194M. Applicability section 194M provides for deduction of tax at source 2% by an individual or a HUF responsible for paying any sum. So the sum is for contract purpose, bonus or brokerage or commission, which is section 194D, and by way of fees or professional services only. It may be noted that only individual HUF, those are not covered, or if any individual other than those who are not covered under section 194C, H, and J are required to deduct TDS under section 194M. So under section 194M, payer could be only those individual HUF whose turnover is less than 1 crore or receipt is less than 50 lakh. Time of deduction, same in almost all the case, whichever is earlier, at the time of credit or payment, whichever is earlier. The threshold limit is huge, and it is 50 lakh. You might remember under section 194J is 50,000, but now it is 50 lakh rupees. No tax is required to be deducted where such sum or the case may be aggregate amount of such sum credited or paid to a resident during the financial year does not exceed 50 lakh rupees. Now, non-applicability is very interesting. It says section 194M would not be applicable if section 194C is applied. So if TDS can be deducted under section 194C, which is specifically for work contract. So if TDS is not going to be deducted in a section 194C, then only we will apply section 194M provision. So 194C will prevail. So if all the condition of section 194C has been satisfied and TDS can be deducted under section 194C, then 194C would be applicable. If TDS cannot be deducted under section 194C, then section 194M can be applicable. In the same way, if in case of brokerage commission, section 194H cannot be applied. In that situation, TDS could be deducted under section 194M, and in case of professional fees, if TDS could not be deducted under section 194J, then you can see that is TDS deductible under section 194M. No requirement to obtain 10. In the same case, section 194 IB, there was no requirement of obtain 10. Why? Because again, section 194M is going to include those individual HUF whose turnover is less than the specified limit. So they are technically small businessmen, or maybe they are not businessmen at all. So it is difficult for them to compliance the TDS return filing provision, etc. So for that purpose, the only requirement is to deduct the TDS and deposit it to the government. There is no requirement of return filing in this case. Now the limit has been explained with the help of an example, and with the help of this example, you will understand exactly how to apply the TDS provision under section 194M. So you have to check both section. Section 194C you have to check first, and if it is not applicable, then you will check section 194M provision, whether these are applicable or not. So if TDS is not going to deduct under section 194C, then only we will see is section 194M is applicable or not. With the help of example, let's see. Mr. Ganesh, an individual carrying on retail business with turnover of 2.5 crore in the previous year 24-25. And the first point of this point is contract payment for repair of residential house. So if you'll see this pair whose turnover is exceeding 1 crore in the preceding previous year. So this pair is included under section 194C. Now we will see, can TDS deducted as per section 194C in this payment? And the payment is 5 lakh rupees. So what is the amount limit to deduct TDS under section 194C? It is if it is exceeding 30,000 rupees for individual contract. So can you tell me that can Mr. Ganesh deduct TDS under section 194C in this first payment of contract 5 lakh rupees for repair of residential house? What is your opinion, students? Yes or no, and why? Neeraj is asking, but sir, in budget 2026, ICAI will introduce short-term course. So that is none of your concern. You focus on your long-term course, okay? So how can we deposit TDS, TCS to government? So there is a specific way you have to go online. There is certain requirement you have to fulfill, then you can deposit the TDS. That processor, the procedure is not in your syllabus, okay? So Arun Sagar is saying yes, Theosami is saying yes, Neeraj is saying no, and Kuldeep is saying yes, okay? So first of all, I'm asking, TDS would be deducted in a section 194C or not? We are not discussing section 194M right now. We are just discussing whether we can deduct TDS under section 194C in this case or not. Nagaraja is saying yes, single payment exceeding 30,000. Okay. Anyone else? Uldeep is saying yes. Diyajan is saying no. The correct answer is no. Why no? Because it is for personal purpose. In the last class, I have also told you that if section 194C is applicable, then if the payment is made by an individual HUF, then TDS would not be deducted or deductible if the payment is for personal purpose. And you can see it is for repair of residential house. If it is a repair of factory building, then yes, TDS would have been deducted under section 194C. So in this case, section 194C is not applicable because the payment is for personal purpose. Now section 194M is a very interesting provision. Section 194M says that there is no exception, there is no exemption for payment if it is made for personal purpose. So 194M would be applicable whether the payment is for personal purpose or not. Now let me tell you, the intention of section 194M was this, that it is for those individual HUF whose turnover is less than 1 crore or less than 50 lakh. But the section says if those person cannot deduct TDS under section 194C, H or M, those person can deduct if it is an individual HUF TDS under section 194M. So in this example, you have seen that section 194C is not applicable. No TDS could be deducted under section 194C. But we have to check section 194M now. So M is for those individual HUF. Those are not going to deduct TDS under section 194C, H or J. So the intention was for those individual HUF having turnover less than 1 crore 50 lakh, but it is not exactly what is the requirement. It says when individual HUF cannot deduct TDS under section 194C, then you can check it out in the section 194M. So now under section 194M, TDS could be deducted because this individual HUF not able to deduct TDS under section 194C. So this individual is eligible to deduct TDS under section 194M. You might be thinking, how it is possible? The turnover exceeding 1 crore. No. The intention was for those individual HUF having turnover less than 1 crore 50 lakh. But section does not say this. Section says that if that individual HUF not able to deduct TDS under section 194C, then 194M is applicable. So we have checked firstly that whether 194C is applicable or not. The answer is no. Now we have to check, can TDS be deducted under section 194M? So if you will think, okay, turnover is exceeding, so individual HUF does not include. No, this is not the criteria. This individual HUF is not covered under section 194C provision, so we can deduct the TDS under section 194M. The second part, so payer has been included. The second point, there is no personal exemption in case of section 194M. So whether it's for payment of residential purpose or commercial, TDS still can be deducted. But the third condition under section 194M is it should exceed 50 lakh, which has not been fulfilled. So that's why TDS cannot be deducted under section 194M also. Understood? And you can see the solution also says that first of all, they are checking that TDS under section 194C cannot be deducted since the payment for personal purpose. But M is not attracted because the payment does not exceeding 50 lakh rupees. So other conditions are satisfied. So if turnover suppose, if the payment suppose 55 lakh, then in this case, we can apply section 195 TDS concept. We will see another example also. Now, second point of this same point number 1 is payment of commission to Mr. Walish for business purpose. So first of all, what we will check? We will check section 194H provision applicable or not. So because payment has been made and a turnover exceeding, so as per section 194H, the payer has been included because the turnover exceeding. Commission purpose, TDS applicable under section 194H, and the limit is also exceeding the specified limit for commission purpose under section 194H. So in this example, 194H TDS would be applicable. Then we do not need to check section 194M provision. Understood? Next example, Mr. Rajesh, a wholesale trader whose turnover was 95 lakh in previous year 24-25. Now you can see this individual cannot be included under section 194C, 194H and 194J in any case. So now in this case, because payer does not fall, because in section 94C, H and J is specifically only those individual or HUF can deduct TDS, those turnover exceeding the specified limit. Because turnover is less than that, so automatically section 194C, 194 H, 194J not applicable. So now we need to check directly section 194M. But in the solution, we have to write it down that in this case, the payment is for contract payment. So 194C is not applicable because payer is individual HUF having less than turnover. Now directly we need to check section 194M. Payment for reconstruction of residential house, personal purpose. We are checking 194M for the payment made in January to March. 20 lakh in January. So the limit section 194M. You can see payer include no personal benefit under section 194M. So whether it's for residential, commercial, that is also included. Now we just need to check the limit of 50 lakh rupees. So the payment in January 20, not applicable right now. Then 15 in February, total 35 lakh rupees, not applicable. And March 20 lakh. So total payment is 55 lakh rupees. So that means TDS required to deduct it under section 194M for full value of 55 lakh rupees in the month of March. Understood? 194C not applicable initially because payer not included under section 194C. But now we will check section 194M. So TDS is going to be deducted under section 194M. Now Satish, a salaried individual. Again, salaried individuals. So automatically 194C, H and J not applicable. And what we are paying? We are paying brokerage or commission. So technically 194H not applicable. The amount is 51 lakh. Yes, TDS under section 194M is applicable because it is exceeding 50 lakh rupees. Dheeraj, a pensioner. Contract payment. So 194C automatically excluded, no business receipt. Payment in October till November for reconstruction of residential house. So 194M applicable. Payer included. Residential purpose, no problem. We can deduct, but the amount is only 48 lakh. So it's less than 50 lakh. So TDS cannot be deducted. So in the solution, we have to write it down that section 194C not applicable in point number 3 and 4 and second because turnover less than a limit. Then we need to check section 194M. And the first point, first of all, we have checked section 194C not applicable due to the amount. But 194M is not applicable because the turnover was not exceeding 50 lakh rupees. So you can see the solution in detail. Let me see if there's any query. Kuldeep is saying 194M not applicable if done for personal purpose. No, 194M does not give the benefit of personal purpose, whether it's for contract, whether it's for professional fees. The benefit is for personal purpose only if section 194C apply or section 194J apply. There is no benefit for personal or commercial under section 194M that we have discussed. We are going to discuss in this also. Okay. It is already written over here. Let me show you. So next is section 194N is there. Now, till now, we have seen that there must be some kind of income generation. There must be some kind of income of someone on which a payer can deduct TDS. Okay. But section 194N is TDS on cash withdrawal. So if you are an assessee, if you are a person whose amount has been deposited in a bank, etc., and if you withdraw that amount from that bank, etc., in cash form, then after a certain limit of withdrawal, the bank will deduct the TDS on the withdrawal. So this is the first case in which you will see there is no income generation. Like I have deposited my amount in the bank, whether in cash or via online mode. So on deposit, there is no problem. But whatever amount is in your bank account, if you are going to withdraw that amount in cash form, then after a certain limit, the TDS is going to be deducted by the bank. In normal case, the limit is 1 crore. Up to 1 crore withdrawal, there is no TDS. If I withdraw more than 1 crore, then the excess amount is required to TDS liability. In case of cooperative society, if they withdraw, the limit is 3 crore. Now, a difference also is there. Like in other section, there would have been some income. And this is a difference. There is no income. There is only withdrawal of my money, which I have already deposited. There is one more difference. In earlier sections, if the limit exceeded, suppose the limit is 30,000, and if it is exceeded 35,000, then TDS is required to be deducted on full value. If the limit is suppose 50 lakh, and if the transaction has been for 51 lakh, then TDS is required to be on full value. In the last example, we have seen that there was a work contract for 20 lakh, then 50 lakh, then 20 lakh again. So the total value was 55 lakh. So as under section 194M, the limit has been exceeded 50 lakh. Then on 55 lakh full value, TDS required to be deducted. Not in section 194N. So 194N is different from this point of view. When you withdraw 1 crore rupees, there is no TDS. But after that 1 crore, when you withdraw 2 lakh rupees extra, then only on that 2 lakh rupees, the TDS provision would be applicable. The earlier whatever you have withdraw, there is no TDS requirement. On the excess value only, TDS limit would be applicable. So there are two differences, major differences, or we can say the different characteristics of section 194M. Applicability, you might notice that I have make a small chart of main provisions for all sections. So whenever you are going to revision of any section, you can first go for the chart. So you will get the basic idea of what we are discussing in that particular section. Okay. So applicability and rate of TDS. Section 194N provides every person. It includes every person. Being a banking company. So they are payer, of course, because they are paying you. So they are payers. Banking company, cooperative society in the business of banking, or a post office. Who is responsible for paying any sum because they are the payer in this case? Being the amount or aggregate of amount. As the case may be, in cash exceeding 1 crore during the previous year to any person. So withdrawal by any person from one or more accounts, because CBS system is there, maintained by such recipient person with it, shall deduct TDS at the rate of 2%. But if the withdrawal is done by cooperative society, if the recipient is the cooperative society, the limit is 3 crore instead of 1 crore. So suppose if I am going to withdraw, after 1 crore, TDS is going to be deducted by the government, by the bank. And if suppose I am a cooperative society, then after 3 crore, TDS would be deducted by the bank. And again, as I have told you earlier, whatever TDS is going to be deducted by the bank, you can claim that benefit of the TDS at the time of filing of income tax return. Again, the deduction is at the time of payment. So there is no requirement of credit or payment, whichever is earlier. You can see the TDS would be deducted in this case at the time of payment. Modification and rate of TDS and threshold limit of withdrawal for recipient who has not furnished return of income for last 3 years. Now the very interesting fact is this. Suppose we are talking about previous year 25-26 withdrawal. So provision says the person who is withdrawing the amount, like I am suppose withdrawing the amount in previous year 25-26, so the rate was 2% if the amount is exceeding 1 crore. But there is a restriction has been imposed that in the year when you are withdrawing the amount in the preceding 3 previous year, that means 24, 25, 23, 24 and 22, 23. The person who is withdrawing the amount, suppose Mr. A is withdrawing the amount in previous year 25-26. So he must have filed all 3 preceding previous year income tax return. This is a very interesting concept has been introduced that the person who is withdrawing the amount from the bank, we have to see whether he has filed his last 3 preceding previous year income tax return at specific date or not. All 3 preceding previous year ITR should have been filed within the specified date of filing. What are the specified date of filing? That we will go through in chapter 8. After this chapter of TDS, we will read the provisions of that topic, which will explain you what are the correct date of filing of ITR. So there would be 2 conditions. Mr. A is withdrawing the amount in previous year 25-26. Either he would have been filed all last 3 preceding year ITR within a specified time, or the answer would be no. If the 3 last year ITR has been filed within time, the TDS rate would be applicable as we have discussed 2% exceeding 1 crore or exceeding 3 crore. But if it is not so, then TDS rate would be changed. If the recipient has not furnished the return of income for all the 3 assessment year relevant to the 3 previous year, for which the time limit for filing of return under section 139(1) has expired, immediately preceding the previous year in which the payment of the sum is made, then what will happen? The earlier limit of 1 crore would be substituted by 20 lakh rupees. That means now after 20 lakh rupees of withdrawal, TDS is going to be deducted, but the rate would be changed. Now it's say up to 20 lakh. Earlier the limit is up to 1 crore, no TDS. Exceeding 1 crore, 2% TDS. Now it's say up to 20 lakh, no TDS. But after 20 lakh till 1 crore, which was earlier limit, after 20 lakh withdrawal till 1 crore, 2% TDS rate would be applicable. And after 1 crore, this rate would be 5%. Up to 20 lakh, no TDS. From 20 lakh exceeding till the old limit of 1 crore, the TDS rate would be 2%. And after that 1 crore, the rate would be 5% if you did not file your ITR of all the 3 preceding previous year as per section 139(1). So 139(1) is going to be discussed under chapter 8. And in case of cooperative society, what will happen? Again, same up to 20 lakh. No TDS. Now, after 20 lakh till 3 crore, because the earlier limit of society is 3 crore rupees, TDS rate would be 2%. And after 3 crore, the rate would be 5%. That has been explained over here. 2% of the sum where the amount or aggregate of amount as the case may be paid in cash exceeding 20 lakh but less than 1 crore. So 2% would be from 20 lakh till 1 crore. And in case of society exceeding 20 lakh up to 3 crore, the rate would be 2%. And the rate would be 5% after exceeding 1 crore, or in case of society, if it is exceeding 3 crore rupees. So this would be the change in rate if the return has not been filed. Non-applicability of TDS under section 194N. So these are exception, and why? Liability to deduct tax at source under section 194N shall not be applicable to any payment made to. So if they are the payee or they are the recipient, we can say, then no TDS. Of course, if the government is withdrawing the amount, if the other banking company withdrawing cash from another banking company or post office withdrawing the amount, if you are ATM operator who is withdrawing the amount, any business correspondent or banking company. So if they are the recipient, if they are withdrawing cash, then this TDS provision would not be applicable. Very, very interesting example is there. That is for your homework purpose. And you can see in this example, it says a person referred to in point number 1 to 6. Total, there are 10 points. So they say from 1 to 6, you will consider that all 3 last year ITR has been filed. So rate would be only 2%, exceeding 1 crore, exceeding 3 crore in these 6 cases. And from case number 7 to 10, suppose ITR has not been filed. So in that case, now rate would be 2% and 5% as per the case maybe. Let me solve 1 or 2 cases for you. So you can see from point number 1 to 6, we have to assume that ITR has been filed. So you can see Mr. Harshit has making the withdrawal from SBI Bank July 1st, 2025. Amount of withdrawal is 1 crore 10 lakh rupees. So normal case is applicable up to 1 crore, no TDS, only the exceeding amount of 10 lakh rupees. 2% is going to be deducted by the bank. Clear? Okay, now let's take third example of cooperative society. So society is withdrawing and the amount is 2 crore 70 lakhs. So normal case is there up to 3 crore, no TDS in case of society. So yeah, there would not be any TDS. Now after this, let me take this kind of case. Mr. DEF and a company, a firm. So in this case, ITR not filed in time or not filed at all. They withdraw 90 lakh rupees. So it is not a cooperative society, it's a firm. So what will happen? Out of this 90 lakh, up to 20 lakh, no TDS. And from exceeding 20 lakh till the 90 lakh amount, the difference is 70 lakh. On that 70 lakh, 2% TDS required to be deducted. Suppose in this case, ITR has been filed. If then there would not be any TDS because only 90 lakh has been withdrawn. Now take an example of PQR Cooperative Society. Again, ITR not filed. The withdrawal is 3 crore 30 lakh. So what will happen? Up to 20 lakh. No TDS. Exceeding 20 lakh till the limit of 3 crore. So difference is 2 crore 80 lakh. TDS would be 2%. And how much is exceeding 3 crore? 30 lakh is exceeding 3 crore. TDS would be 5%. Understood? Very huge impact if no TDS. Yes. So you can see what exactly government is doing. The government is doing only that thing that they are collecting tax. They are collecting tax earlier at the time of payment to someone, at the time of withdrawal. So government will going to have a huge amount of tax in the form of TDS. And that is before at least 10 months because ITR need to be filed in July of next year. So in some case, you will get the amount at least 14 months before. In some case, you will get the amount 10 months before, 8 months before. And you will see it would be lakhs of crore as a TDS collection. And lakhs of crore you have collected, suppose 10 months before. On that lakhs of crore, within 10 months, you are going to earn extra income of interest, etc. Government will invest that amount somewhere and government will earn extra interest of lakhs of crore again on that amount of TDS. So technically, government is earning extra income without even extra charges. Suppose I am an assessee. I have to pay 50,000 tax. So it won't affect me a lot if I'm going to pay that 50,000 today or after 6 months to the government. It won't affect me a lot because on 50,000, I'm just going to pay to the government 6 months before. Now, suppose like this 50,000 lakhs of assessee is paying this 50,000 average amount 6 months before to the government. So, government is having lakhs of crore in their hand 6 months before. So, suppose how much interest income government can earn by that lakhs of crore to invest in somewhere else. So that was the basic logic behind it. But there are other cases also that we need amount of tax for collection for our infrastructure on regular basis to avoid tax evasion. Because if I am not going to pay tax regularly now, so maybe I'll not pay at the time of filing of return, etc. So there are multiple reasons behind it, but the major is extra revenue. So those were section 194N. So these are those section which has been explained in your study material in detail, but TDS has not been ended yet. There are certain more TDS provision that are not those deeply discussed, but those are also important from the point of view of your examination. Section 194 T2A, premature withdrawal from employees provident fund. So we have discussed the provision of provident funds. You must have remembered under salary topic, recognized provident fund. So if an employee deposit their amount in that provident fund, a same contribution generally done by employer in the provident fund. And after certain time, you can withdraw the amount from your provident fund account. So we are discussing what would be the consequences of TDS on the withdrawal of that provident fund amount. So if any one of you have remembered, the repayment of recognized provident fund is exempted. But we are talking about premature withdrawal. It is exempted if we fulfill certain condition. So if the premature withdrawal from the provident fund account, and if the withdrawal exceeding 50,000, condition is this: payer would be, of course, the provident fund organization. Payee would be, of course, an employee who's an individual. The TDS rate would be 10% at the time of payment. So if it has been withdrawn premature, that means premature has been before 5 years of continuous service. If you withdraw the amount of provident fund before completion of 5 years of your continuous service, then on withdrawal, TDS is going to be deducted. Exemption, that means no TDS would be deducted if the withdrawal after continuous service of 5 years. So technically, what is the meaning of this? If before 5 years, TDS would be there. If after 5 years, there would not be any TDS. Even there are certain exceptions. If you withdraw even before 5 years for medical reason, etc., or if you transfer your provident fund amount from another employer organization, then even if you withdraw before 5 years, there would not be any TDS deduction. So even before, if employee opts transfer of accumulated balance to the new employer. So you withdraw from one employer, you do not use it. You transfer it to another employer provident fund account. In that case, even if before 5 years, no TDS. Or the reason is ill health, contraction or discontinuation of business, cessation of employment, etc. Employer shut down the business, or you need for your medical reason, etc. Then income tax is very emotional. When there are certain reason which is beyond your control or due to any health issue, life issue, they will give you the benefit. Now we have discussed the interest on security TDS concept under section 193, but we did not discuss the dividend concept on security. So here it is, section 194. Dividend includes dividend on even preference share. So if any kind of dividend you are receiving as a shareholder, TDS is going to be deducted. If you are an individual shareholder, then TDS would be deducted by the payer. Who would be the payer? The company. If the amount is exceeding 10,000 in a financial year. If you are an individual shareholder, if you are other than individual shareholder, then TDS would be always deducted. There is no 10,000 limit. Payer would be the, of course, principal officer of domestic company, resident shareholder. So the limit is, if you are an individual exceeding 10,000 dividend, TDS would be deducted. Other than individual, always TDS. Rate is 10%. Exemption if TDS, if the dividend has been paid by LIC, GIC, etc. If they are going to pay you the dividend, no TDS, or any person notified by government. You can see if they are received by individual shareholder by any mode other than cash, then the limit is exceeding 10,000 TDS. No threshold in other cases. If other than individual or payment is in cash, which generally not possible in nowadays, payment is online mode in Demat account. But if other than cash, then always TDS. Sorry, other than not other than in cash, then TDS. Or if any other case other than the individual shareholder, then TDS would be there always. Dividend includes all kind of dividends, section 222 till section 222F. A, B, C, D, E, F. So all kind of dividend, any these kind of dividend you receive, then TDS is required to be deducted. And I believe that you must have gone through the section 222 A, B, C, D, E, F under income from other source. What we call these kind of dividend? Who will tell me? What we call dividend under section 222A till section 222F. Santosh Das is back and he asking again the same question he always used to ask. What are the question we will get in the examination? No idea. Santosh, sorry. I disappointed you again. Let's see the answers. Deemed dividend, deemed dividend, deemed dividend. Exactly. We call it deemed dividend. So this section 194 TDS provisions are applicable on dividend as well as deemed dividend. Well done. Now section 194B. We have discussed section 194BA, that is for online winning games, etc., in which TDS required to be deducted if the net winning is more than 100 rupees, etc. Now there are other winnings. The winning like lottery, crossword puzzles, or card game, or other game, or any sort of gambling, etc., batting in a casino, other than winning from online game, which we have discussed under section 194B. Other than that winning. So these are also part of casual income. But in this case, amount in respect of a single transaction, if it is exceeding 10,000, then TDS required to be deducted. Payer would be, of course, that person who is going to pay you for the winning. The rate of TDS is huge, 30%. This is the highest rate of TDS under TDS provision. At the time of payment, TDS required to be deducted. Again, the same concept as in case of kind or cash. If the winning is in cash or kind, and if the cash or kind is not sufficient to make the payment of TDS, then that is the requirement or is the liability upon payer to deposit the amount of TDS after collecting from the winner, etc., whatsoever the reason. Really? Again, the same is 194BB, that is winning from horse race. It is also a casual income. Again, if the single transaction of winning is exceeding 10,000, TDS required to be deducted 30% at the time of payment. And the payer should be a bookmaker or a person holding license for horse racing or for arranging for wagering for batting in any race course. It should be a legal horse race. Okay. Now 194D, that is for insurance commission. Students, if you have remembered, when we discussed section 194H, I have told you this is for commission other than insurance commission and lottery agent commission. Because for Insurance commission section 194D exists, and for lottery 194G. So 194H is other than lottery and insurance, like property commission, other commissions. So now we are discussing the provision of insurance commission. The amount limit is same, 20,000 also in 194H and 20,000 in case of section 194D also. Amount or aggregate amount exceeding 20,000. Who would be the payer? The payer would be any insurance company, etc. Any person responsible for paying any income by way of remuneration, reward for soliciting, procuring insurance business. That means insurance company is the payer. Any resident would be paid. The rate is 2% if you are a non-corporate resident, and 10% if pay is a domestic company at the time of payment or credit, whichever is earlier. Simple provisions are these. 194D8 says if you receive any sum from insurance company, now we are not talking about the agent or commission. We are talking about as an assessee. So if you have taken an insurance policy and now you are getting some compensation or the maturity proceed from that insurance company, then TDS would be applicable or not. So this provision also you might have gone through under section under income from other source. Section 1010D would be there. There would be a process in which it says when you are getting compensation or maturity value from any insurance, then if it is not exempted under section 1010D, then it is going to be taxed under income from other source. So if anything is exempted income, then there would not be any TDS at any case. So again, we are discussing section 194D(a), those circumstances in which exemption is not there. So if there is section 1010D exist, that means the compensation, the amount you received exempted, the TDS cannot be there. So you can see any sum under a life insurance policy, what it says policy not fulfilling the condition is specified under section 1010D. Because if it is going to fulfill the condition as specified under section 1010D, then automatically there would not be any TDS because that is exempted income. TDS threshold limit is exceeding 1 lakh rupees. So if the payment you received is exceeding 1 lakh, TDS could be applicable. Of course, the payer would be the insurance company. The pay would be a resident individual. The rate is 2% at the time of payment. Exemption from TDS, it says if that is exempted as per section 1010D provision, then there would not be any TDS automatically. 194G, now the commission on sale of lottery tickets. So as we could be an insurance agent and we receive commission on selling of our insurance policy to the customer, that commission flows from the insurance company. In the same way, we could be a lottery agent. And when we sell lotteries, we get some commission from the lottery company. And again, on that commission, under section 194G provision applicable. Commission on sale of lottery. Same amount. That would be a lottery company. That would be the person who is selling that lotteries. The rate is 2%. Time of credit or payment, whichever is earlier, normal provision. So, in case of commission, 3 sections are there. 194D, 194G, 194H. The good news, the limit of amount 20,000 is same in every case. 194IA, again important. And when I say important, that does not mean others are not important. Everything is important. In my opinion, this is different. That's why it is important. And it is for payment on transfer of certain immovable property. So if you transfer certain immovable property, then TDS is required to be deducted. If the amount is exceeding 50 lakh rupees, whether the consideration or stamp duty. Suppose the consideration is 45 lakh and the stamp duty value is 55 lakh. So yes, section 194 IA would be applicable. Suppose it is reverse. Consideration is 55 lakh, stamp duty value is 45 lakh. Yes, TDS provision would be applicable because if any of it exceeding 50 lakh, then TDS required to be deducted. Any person being a transferee need to be the payer. The payer would be the person who is receiving the property, who is buying the property. Okay. The receiver would be the resident transferor. The amount is 1% of consideration or stamp value, whichever is higher. Now, this is interesting. The applicability would be if any consideration or stamp duty value, any of it exceeding 50 lakh. But the TDS would be applicable on the stamp duty value or consideration, whichever is higher. That means if this case is applicable, TDS would be 1% on 55 lakh. And if this case is applicable, then TDS would be 1% of 55 lakh. So whichever is higher, TDS would be charged on that value. And this provision not applicable on agricultural land. So if you are transferring an agricultural land, then no need to deduct TDS under section 194 IA. Whichever is higher at the time of payment, etc. Meaning of consideration has been explained over here. Consideration means if you pay any parking payment, any gym health membership, etc., and it is mandatory for registration, then that amount also would be the part of your consideration. So if there's any charges like parking facility, membership fees, electricity, water facility, maintenance fees, advance fee, or similar nature which are incidental, that means necessary for transfer of property, then that would also form part of your consideration. 194K, income on units other than in the nature of capital gain. So we can say it's kind of a dividend. If you are dealing in mutual fund, etc., and you are earning income on units, those are not at the time of sale. That is going to be deduct TDS under section 194. You can see the amount limit also is like dividend exceeding 10,000. Of course, the payer would be the company which is paying that income on units. Any resident rate is TDS 10%. Same almost provision like dividend. Now again, this is different. That's why I am marking it. That is 194 LA. That is compensation on acquisition of certain immovable property other than agricultural land situated in India. So this word you might have gone through under some specific heads of income, that is compensation on acquisition of certain immovable property, that you must have gone through under capital gain chapter. Section, who will tell me the transfer under compulsory acquisition? What is the section of transfer of compulsory acquisition? The provision you must have gone through for compulsory acquisition. Okay, fine. Let it be. Tell me the two kinds of compensation we receive in case of compulsory acquisition of certain immovable property. There are two parts of compensation what we can receive under compulsory acquisition. We see Mr. Neeraj saying, but sir, for some business owner, the immovable property is good, so it will apply on them also. No, it will not apply in that situation. And technically, he would not be the payer, he would be the payee. Property or cash. No, what it is? Jayendra is saying correct. Original compensation and enhanced compensation. Jayendra Pokle is saying section 1037. No, Jayendra. 1037 is the exemption. That if you received compensation, then it would be exempted. Dhanlakshmi is saying section 247. 247 is the definition of transfer, which includes compulsory acquisition. But the exact provision of section chargeability of compulsory acquisition is section 45(5). Well done, students. Chalo. So if the compensation is exceeding 5 lakh rupees other than agricultural land, remember, okay? So if the compensation is exceeding 5 lakh rupees, in that situation, TDS is going to be deducted. Who is going to deduct the TDS? Of course, the person who is paying the amount of compensation. Rate is 10% at the time of payment. The provisions are applicable on compensation acquisition on agricultural land in India, whether rural or urban. So this is not applicable on agricultural land. Now section 194P. Pension. The payment of pension, if you receive, then there would not be the TDS in certain case and there would be a TDS in certain case. So you might be seeing this section is huge, but this is only basic things have been written in the section. That's why it looks like that it is very huge, but there is nothing complicated or technical in this case. It says pension is going to be received generally by a senior citizen. Okay. So if any senior citizen is receiving pension, then TDS provision would be applicable if these specific condition has been satisfied. So if it says if the pension is exceeding your basic exemption limit, which is 4 lakh in case of default tax regime, and 2,50,000 or 3 lakh rupees or 5 lakh rupees. Of course, in this case, 3 lakh and 5 lakh would be applicable because 250 is not for senior citizen. So if you are receiving pension and it is not exceeding your basic exemption limit, whether it's 4 lakh or 3 lakh or 5 lakh, then there would not be any TDS liability. It would be applicable if the amount has been exceeding 4 lakh or 3 lakh or 5 lakh under optional tax regime. And if payer would be the notified bank which is paying the pension, because employer will not pay you the pension because service has been ended. So from a certain bank, you are going to receive the pension. So the payer would be that bank. Person would be a specified senior citizen. So it says if the specified senior citizen has exercised the option of after deduction under default tax regime, under optional regime, you will see the simple language. And if this is exceeding the basic exemption limit. So when this provision would be applicable, the provision would be applicable when a senior citizen receiving pension, which is exceeding the basic exemption limit. How the TDS would be find it out? As the rate in force. We have, if you are under default tax regime, as per the rate in force under default tax regime. If you're under optional tax regime, as the rate in force in case of optional tax regime. That means as per slab rate. Normal slab rate provisions. This is calculation of TDS just like section 192. Whatever pension you are receiving, we have to calculate tax on it as per normal provision. And the tax need to be deducted by 12. So that would be per month TDS provision. The kind of process we have done in section 194 to 192. Exactly same kind of provision for the calculation of tax on your pension, because pension is also a kind of a salary payment. So the salary concept is technically applicable. Now the meaning of specified senior citizen. Now the new thing is it says if the age of that person is exceeding 75 years. This is the exception what we are discussing. Suppose Mr. A age is 65 year. He is receiving pension from a bank and that pension does not exceed his basic exemption limit. Then there is no requirement of TDS. If it exceeds the basic exemption limit, then we need to calculate the tax as per default tax regime or optional, as the case may be. The tax need to be divided by 12. That would be his TDS liability on pension. So every month, whatever pension he will receive from bank, this amount of TDS is going to be deducted. Now, for specific senior citizen, there is a special provision has been made. It says if the age of that specific senior citizen is 75 year or more, he is only having two incomes, the pension income and interest income. Now listen very carefully. If that specific aged of income whose age is 75 year or more, condition 1, he is receiving only pension income and only interest income, and this pension and interest has been paid by the same bank, suppose SBI, BOB, whatever it is. If the pension and interest income has been received by only that bank, same bank, if the interest income is from another bank and pension is from another bank, then this provision would not be applicable. What are we discussing? You will come to know. So if age is more than 75, he's only having pension income and interest income, and that is from the same bank, and TDS has been deducted as per the provision. Then the benefit is he does not require to file income tax return. So what will happen if interest from other bank and pension from other? That he needs to file his income tax return. So this benefit is for only for one purpose, that he is only having, you can see, pension income, no other income except interest received receivable from any account maintained by such individual in the same specified bank in which he is receiving his pension income. So what is the advantage? The advantage is he does not require to file his income tax return. This is the advantage. And this provision we will again discuss under chapter 8, filing of return of income. There would be an exception when we will discuss that chapter. There would be an exception which will say that any senior citizen having more than 75 years of age, only receiving pension income, interest income from same bank, does not require to filing of return if the all amount of tax has been deposited and paid by as a TDS. So exactly this provision is going to be come again in chapter number 8. Okay. So if it is not so, if condition does not fulfill, if age is less than 75, is interest, other interest income also from other bank or house property income also, then he needs to file his income tax return. That's it. Section 194Q. Section 194Q says purchase of goods. So now if you purchase goods more than 50 lakh rupees in a previous year from the same person, of course, then you need to deduct TDS at the time of payment. So we are the buyer. Suppose I am a buyer. I purchase goods from the same seller for more than 50 lakh rupees in a year. Then after exceeding 50 lakh rupees, I need to deduct the TDS on the full value. Full value, okay? Not as section 194N, full value. So who would be the buyer? The buyer would be that person who is going to purchase the goods. Who is the payee? Payee would be the seller, any resident. Buyer who is responsible for paying any sum to any resident for purchase of goods. There would be purchase of goods, not services. Buyer means a person whose total sale, receipt, etc. This is a special buyer, and the turnover must exceed 10 crore rupees. Only those buyer has been included whose turnover is exceeding 10 crore rupees in the preceding financial year. You must remember, in today's diagram, I have mentioned over here section 194T from partnership firm payer and 194Q is specific. Why? Because this require more than 10 crore turnover in the preceding previous year for the applicability of section 194Q. So in generally the requirement is more than 1 crore or 50 lakh, but for section 194Q the payer must have turnover exceeding 10 crore in the preceding previous year. If it is not more than 10 crore, no TDS requirement. The requirement of TDS is again 0.1% of the sum exceeding 50 lakh rupees at the time of credit or payment, whichever is earlier. Non-applicability, Section says if the TDS is deductible under any of the provision of the Income Tax Act. Suppose in this case, suppose TDS is required to be deducted under any other provision of the Act already, then Section 194Q would not be applicable. Or if TCS provision is applicable. What is TCS? There are certain transactions in TCS also, tender case, etc. So if your case does fall under TCS concept, then no requirement of TDS under Section 194Q. Or if TDS has been deposited under any other case, then again also Section 194Q would not be applicable. Other points is same. 194R. Again different, that's why important. Now, any benefit or perquisite, if an employer provides any benefit or perquisite to an employee, in that situation, that perquisite does fall under employee's salary head of income. And because it would become the part of your salary income, it would become part for TDS provision under Section 192. Because for the purpose of TDS under Section 192, we will add your basic salary, advance salary, allowances, perquisite, etc., etc. So we are also discussing provision of perquisite over here, but this is not the perquisite we have discussed under Section 192. That is the perquisite in which an employer pays perquisite to an employee. So TDS does fall under Section 192, but this is a case when a person is paying perquisite to the businessman. When I am receiving a perquisite as a businessman, not as an employee. Suppose I am carrying an agency business, any car showroom. Suppose I am carrying an agency of Maruti car. Okay. And the company gave me an option that if you are able to sell 500 Maruti cars in a year, we will provide you the benefit of a holiday trip for you or your business personnel or your marketing manager for 5 days holiday trip to Dubai. Or we will give you a certain gift in kind, a new car for the business, etc. So if I am receiving a perquisite not as an employee but as a business venture, so for that purpose, TDS is going to be deducted under Section 194R. Mr. Neeraj is saying, sir, will we study some TDS in CA final or all TDS are being taught in intermediate? There is a lot to study in final also, student. There are non-resident is not pay in our case. Section 195 is for TDS in case of non-resident assessee. And why you are bothered about the final circumstances? As I always say, whatever is in your front, you just focus on it. Why you are thinking about the final? First clear your intermediate, then you'll come to know what there would be in final. And let me tell you, in final, there would be a new tax waiting for you, DTC. So this is your Income Tax Act 1961, and now there would be Income Tax Act 2025. You are going to read in final. So do not bother about it. Take first step first. Okay. So this is a Section 194R what we were discussing, and this is for any perquisite benefit facility we received as a business. On that case, Section 194R provision is applicable. Any perquisite benefit, whether convertible into money or not, arising from business or the exercise of the profession, the provision would apply to any benefit perquisite, whether in kind or cash or partly in cash or partly in kind. Value, if we receive more than 20,000 rupees perquisite in a year, TDS is going to be deducted. Who will deduct the TDS? Of course, the payer. Any person other than individual HUF. So in the today's format, I have written down this section also in those 6 sections, section 194A, C, H, etc. That in case of R also, the payer should have, if that is individual HUF, the turnover or the receipt should exceed 1 crore 50 lakh as the case. Rate is 10% before providing such benefit. So this you will see is a very different word. Normally it was at the time of credit or payment, whichever is earlier. It says before providing such benefit or perquisite. Whether the benefit or perquisite is wholly in kind or partly in cash or partly in kind, same concept as per winning from lottery, etc. The payer needs to deposit to the government. Now, this is a new section which has been inserted from assessment year 26-27. Section 194T. When a partnership firm pays any salary, remuneration, commission, bonus, or interest to a partner, then that firm needs to deduct TDS if it is exceeding 20,000 in a financial year. So, of course, if the sum exceeding 20,000, who would be the payer? The payer would be only the firm. Who would be the payee? Partner of firm. Rate of TDS 10% at the time of credit or payment, whichever is earlier. So those are TDS provision we have gone through. Now illustration is for section 194DA, that is for insurance maturity proceed if we receive, then whether TDS is required to be deducted or not. So you are able to solve illustration 10 only when you know whether section 1010D is applicable or not in these cases. So if section 1010D is applicable, then of course there would not be any TDS. So 1010D plus section 194DA provision, you should know. Only in that situation you would be able to solve illustration 1, 2, and 3. So it's my request, kindly revise income from other source section 1010D provision. You must have gone through those provision, then solve this example as a homework. If there would be any problem, of course, I would be there for you. Solution is there, but please do not see this solution. At least revise section 1010D concept, then try to solve it. That would be really good for you. Illustration 11. X sold his house property in Bangalore as well as his rural agricultural land for a consideration of 60 lakh and 15 lakh respectively to Mr. Y on 1 August 2025. He has purchased the house property and the land in the year 24 for 40 lakh and 10 lakh respectively. Stamp duty value at the date of transfer is 85 lakh and 20 lakh for the house property and rural agricultural land. You have to tell the implication as per TDS in the hands of Mr. Y, assuming that Mr. X and Y both are resident Indian. So you can see in case of agricultural land, there would not be any TDS at all. Clearly. And the property which has been sold other than agricultural land for 85 lakh, TDS liability would be there because it is exceeding 50 lakh rupees. This is section 50C provision for capital gain purpose. So this would be the part of your capital gain provision. Tax implication under income from other source for inadequate consideration, that a part of income from other source. This is only the TDS implication. It says 194I not attracted in case of agricultural land. Exceeding 50 lakh, section 194IA would be applicable. It would be applicable on higher of 60 or 85, whichever is higher. So on higher, 1% TDS would be applicable. So you can see the solution of TDS questions are that easy. This is like an examination question. That would be kind of a question which could be asked in the examination. So point 1 and point 2 is from capital gain and income from other source. But you can see that TDS implication is so easy that if you remember the payer, pay, the rate and the amount, you would be able to solve the question so easily. Okay. This is for that section 194P. Then in that situation, there would be a senior citizen receiving pension, etc. If that is from the same bank account, you do not need to file income tax return, etc. So that provision has been explained in this example. This is for homework. I believe whatever homework I am giving to you students, you are actually trying it. Okay. Again, this is for section 194Q. Let's solve this. Mr. Gupta, a resident Indian, is in retail business. His turnover for financial year 24-25 is 12 crores. So he does fall in the definition of payer. Section 184Q needs the turnover exceeding 10 crores. So turnover is 12 crore. He regularly purchased from another resident, Mr. Agarwal, a wholesale and aggregate payment, wholesaler, and the aggregate payment has been made like this: 95 lakh aggregate, but it has been done 20 lakh on 1st June 2025. So for section 194Q, the payment must exceed 50 lakh rupees. So on 1st June, the payment was only 20 lakh. So no need to deduct TDS. Then 25 lakh on 12th August 25. Again, total is now 45 lakh. No requirement of TDS. On 23rd November, there is one more payment of 22 lakh. Now it is exceeded 20, 25 and 22. 67 lakh. So TDS now required to be deducted. And 28 lakh on 25/3/2026. So on 67 lakh, it is exceeding 17 lakh excess. So on this 70 lakh, TDS required to be deducted. On the excess value, TDS required to be deducted, not on the aggregate value, as per section 194N, same as per section 194N. Once the limit exceeded, then on the last payment of 28 lakh on full value, TDS required to be deducted. 0.1% it was, okay? So you can see the solution also. Tax would be 1700. 0.1% would be on the axis which is exceeding the 50 lakh limit. And then the remaining 2800 required to be deducted. The second point was, what is the implication if the turnover was 8 crore instead of 12 crore? Because if turnover is less than 10 crore, then section 194Q would not be applicable. If you not furnish the PAN number, higher TDS rate would be applicable. Clear, students? Just a second. There is a concept of higher rate of payment if you does not submit your PAN number. This point you will discuss later in this topic. Do not worry about it. So that was the TDS provision we have discussed till now. Now let me see if there's any query. Neeraj saying, yes, sir, we solved it. Thank you so much, Neeraj. I believe that you are studying really hard. I believe that. And please make sure that you are not taking these classes casually. You have to be very sincere. If you are covering your syllabus as per the classes, let me tell you, you would be in a very good position to complete your syllabus and you will have enough time to revise the provisions also. Okay. In section 194Q, if we pay to creator, then we have to do TDS or not. No, Neeraj, you are getting it wrong. It's not about the being creator or debtor. I am a buyer. When I purchase goods exceeding 50 lakh rupees, TDS need to be deducted. Whether you are not paying the amount of that goods you purchase, but TDS need to be deposited to the government. So it's not the creator, it's about the me who is purchasing the goods and if the value exceeded. So even if I am a creator of someone, but the TDS requirement need to be fulfilled at the time of payment or credit, whichever is earlier. So it's not a cash payment, even it's purchase of goods on credit also, but TDS required to be deposited. Okay. Student, any other query? If there's no query, then we are going to have a small break. Then when we will resume, we will complete our TDS provisions, other small sections regarding payment of taxes, penalties, fees, filing of return. And then we have to start advanced tax provisions also. And one important thing to all of you, because now we are having continuous classes, like we have classes on today, then third, then fourth, then fifth and sixth. So next 5 days we have classes. Today we will complete our advanced tax provision, and tomorrow we will complete our TDS TCS advanced tax, the full topic. Day after tomorrow on 4th, we will complete revision or provision for filing of return, and then 5th and 6th for computation of total income and tax. So let me tell you one thing. The last topic, which is computation of total income and optimization of tax, is the summary of all the chapters, all the numerical topic you have gone earlier. This is the summary, because in that chapter we have to solve the full question, which is generally compulsory questions, in which you have to calculate salary, income, house property, capital gain, PGBP, other source, deduction, set off, clubbing provision, rate of tax provision. Everything would be in a single question. So it's my humble request to all of you to understand that chapter. Please revise basic concept chapter. The basic concept chapter only rates of taxes, slab rates, surcharge provision, rebate provision. The numerical part, what we have discussed, the rates of taxes part. Please revise that. Okay. In chapter 2, residential status, you can go through it once only. There's no much we are going to discuss about that topic, but PGBP and capital gain, please. So please revise basic concept, then PGBP concept and capital gain. Please revise these three topics to understand the chapter number 9, that is computation of total income and tax liability. That is going to help you a lot, because in chapter 9, I am going to solve the tax calculation directly. So we are not going to discuss how to apply the slab rate, because I will expect that already we have covered that chapter, basic concept, PGBP, capital gain, etc. So we are not going to teach the provision. I am not going to teach you the provision how we calculate the basic rate of taxes. So please, why I applied surcharge of 10%, 15%, why I am providing rebate of so much of amount. So please revise that topic. That would be really helpful to understand chapter 9 provision when we will discuss those topic on 5th and 6th of February. Okay. So Mr. Nissa, can we have a small break of 10 minutes? निसर्ग जी, क्या हम एक थोड़ा सा ब्रेक ले सकते हैं? ओके। Okay, students, welcome back. I believe you must have your coffee, tea, etc. So now we can continue to the provisions. And the major provisions of TDS we have discussed. We have completed all the provisions according to which we have to deduct the tax. Now the procedure part of TDS is there. So this procedure part is for just a reading purpose. Those technical point, if there's anyone, I will let you know. And other things are just for reading purpose, that you have to file your TDS return, you can deduct the lower rate of TDS, etc., etc. But I believe the provisions in the examination would be more focused on whatever we have covered till now. Now, income payable net of tax. It says where an agreement or other arrangement, the tax chargeable on any income referred to in the foregoing provision of this chapter is to be borne by the person by whom the income is payable. Then, for the purpose of deduction of tax under those provisions, such income shall be increased to such amount as would, after deduction of tax thereon, be equal to the net amount payable under such agreement or arrangement. So generally it says, suppose Mr. A going to pay 1 lakh rupees to Mr. B and TDS rate is 10%. So technically what should have done, that TDS of 10,000 should be deducted by Mr. A and Mr. B going to receive 90,000 rupees. In this scenario, what would be treated as Mr. B's income? Mr. B's income would have been 1 lakh rupees. Okay, this is normal case. But what point number A suggesting, suppose it says, suppose in this scenario, now Mr. A says that the 10,000 rupees tax he will pay on behalf of Mr. B. Mr. A say, I am going to bear this tax on behalf of Mr. B. So now Mr. B will not receive 90,000. He will receive 1 lakh rupees, because the amount of TDS liability is going to be bear by the payer in this situation. So if it happens, then the point say we had to consider now Mr. B income is not 1 lakh, but now we will consider Mr. B income 1 lakh 10,000 rupees. Simple. So generally this happens, then when there is a TDS liability, we deduct that amount of TDS from his income, but the gross income of 1 lakh would be his income of Mr. B. But suppose in this special case, if payer takes the liability to deposit the tax on behalf of Mr. A, on behalf of Mr. B, then the amount of income would have been increased by the amount of tax which has been bear by the payer. But this case is not applicable in case of non-monetary perquisite case. We have discussed this point earlier also. This concept is not applicable in case of 192(1)(a). Because if non-perquisite tax liability has been borne by the employer, in that situation, that 10,000 would not be treated. The tax paid by the employer would not be treated as the income of Mr. B. And again, the employer, Mr. A, cannot take the benefit of 10,000 as expenditure also in his books of account. So this is not in case of, that means this provision is not applicable in case of non-monetary perquisite tax payment. Third one is a normal case. It says, suppose anyone has received any income after tax. Suppose the question says that Mr. B received 90,000 rupees income. That is called net income. After deducting 10% TDS. So this is after deducting TDS. So for the purpose of income of Mr. B, how much we need to include it in his GTI? The amount which is before deducting of this TDS. And how we can find it out? 90,000 is equivalent to 90 to the value of 100. So the gross income would be considered in the hand of Mr. B should have been 1 lakh rupees. So if any payment is net of tax, then we have to gross it up. So the amount is paid net of tax. The taxability has to be calculated by grossing up the amount, since the tax itself represents the income of the pay. This is for your reading purpose, students. Certificate for deduction of tax at a lower rate. So generally the rate, whatever we have gone through, needs to be deducted under TDS. But there are circumstances when you will apply to the assessing officer, and assessing officer, if thinks it is a fit case for lower deduction of tax or even no deduction of tax, then he can allow you to deduction of tax at a lower rate also, or there would not be any deduction of tax under certain circumstances. Again, this is the procedure part. The section applies where in the case of any income of any person or sum payable to any person, income tax is required to be deducted at time of credit or payment, etc. We can make an application to assessing officer for lower deduction or for non-deduction of tax. So there would have been some reason. The basic reason should have been this, that there is no income tax liability on my income. Because suppose I am receiving 1 lakh rupees commission under section 194H. So it is more than 20,000. So TDS would have been deducted by the payer. But suppose this is my only income. Only 1 lakh rupees is my income. There is no other income. So I can request to assessing officer, there is no requirement of deduction of tax because this is my only income and there would not be any tax liability. So basic exemption limit, it is lower than basic exemption limit. So there would not be any tax liability. So please do not deduct the TDS or deduct the TDS at a lower rate. So in these kind of circumstances, assessing officer, if thinks that is a fit case for that, so they can allow there a lower rate of deduction of tax or whether no deduction of tax in certain circumstances. Reading purpose. So there was lower reduction. There is no reduction in certain cases. Again, the basic idea is this. If there is no tax liability, if you prove that there is no tax liability on the income, whatever we are receiving, so there should not be any deduction of tax. So there could be any no deduction of tax. For that certain thing, we have to submit some specific form. This section enables an individual who is resident in India to receive dividend without deduction of tax at source under section 194H on furnish a declaration duplicate in prescribed form number 15G. So 15G will say that there is no tax liability because my income is less than the basic exemption limit. So in that case, there could be no deduction of tax. Again, for reading purpose, you have to prove that my estimated total income is not going to be exceed the basic exemption limit and the tax liability would be nil. Again, same case. You can go through it. Again, same provision. Declaration not permissible if income aggregate of income exceed basic exemption limit. In normal cases, if your income exceeding basic exemption limit, after including these income, if your income exceeding basic exemption limit, even if there is no tax, suppose in case of your default tax regime, your income is 6 lakh rupees. So it is exceeding the basic exemption limit of 4 lakh, but still there would not be any tax because due to rebate. But you have to, in this situation, there would be TDS. You cannot avoid the TDS deduction because it is exceeding the basic exemption limit. But if you are a senior citizen, this is a case of senior citizen, if there is income of 6 lakh rupees, which is exceeding the basic exemption limit. So in case of senior citizen, if there is no tax, then there could not be any TDS. But if you're not a senior citizen, that even if there is no tax, there would be TDS liability arise. But for senior citizen, this benefit has been provided that if there is no tax, even income exceeding the basic exemption limit, there could be no liability of deduction of TDS. No reduction in certain cases, notified person, time limit for delivering of query, etc. Miscellaneous provision, that's for your reading purpose. There is nothing technical. Tax deducted is income received, credit of tax deducted, duty of person deducting the tax, the person who is deducting the tax, he has to file return, etc. If he did not file the return, etc., then there would be penalty, etc. upon it. Further, employer paying, rule number 30, provide detailed information. This is just for reading purpose. If there is any arithmetical mistake, then you can rectify it also. This is the late fees. This is important. So if you did not file TDS return on time, then there could be a late fees 200 rupees for every day, which could be up to the maximum amount of TDS. It cannot exceed however, the total amount of fee shall not exceed the total amount of tax deductible, etc. Consequence to failure to deduct or pay TDS, if you do not deduct or pay the tax, the payer would be treated as assessee in default. So this is also again for reading purpose. This is interest liability. It says if you do not deduct the interest, the rate, if you do not deduct the TDS, the rate of interest would be 1% per month. If you deduct the TDS but do not deposit it to the government, the rate of TDS interest would be 1.5% per month. Again, for reading purpose, certificate for tax reduction, reading purpose. This is a diagram. Again, the study itself says the entire TDS process can be understood at a glance from the diagram given in the next page. The reference to rules and forms are, the rules and forms are only for information of students. They are, however, not required to memorize the rule numbers and forms numbers for examination purpose. So you do not need to memorize these details, just need to go through it in normal procedure. Person who is responsible to deduct TDS, etc. Again, for reading purpose. Mandatory furnishing. No, this is important, you can say. So there was a point under section 194Q example we were discussing that the rate of TDS would be higher if you do not submit your PAN. So if you do not submit your PAN, the rate would be the rate as prescribed in the Act, the Income Tax Act, the rate in force as per Finance Act, or rate is 20%, whichever is highest is going to be applied if you do not submit your PAN number. 5% is the highest in case of section 194Q. Other than 194Q, if you do not submit your PAN, then TDS rate could be 20% in the cases. Now, the next main topic is advance payment of tax, section 207 to 219. Let me tell you, this advance tax provision is just a process what you have to understand first. Once I will explain you what is the advance tax, how it works, then we do not need to go through with the provisions literally from the study material. You will understand how we are going to solve this question first. So first we will discuss the concept of advance tax with an example. Then we will go through with the provision concept. So Mr. Neeraj wants to ask something. Just a second. Yes, Mr. Neeraj. Can we unmute Mr. Neeraj? What happened? Where is Mr. Neeraj? Okay. So moving on. Now let me tell you what exactly advance tax is there and how do we need to solve a question of advance tax. This will actually make everything crystal clear. And then we will read the provision from the study material or our notes. Now we are discussing all collection modes of tax. So as we have discussed in the first class also, in the first session, that TDS is on certain income. If you'll see, there are majority TDS is applicable in mostly those cases. There are certain kinds of income of someone, whether it's salary income, interest on security, interest other than interest on security, dividend income, etc. Except in some exceptional cases, as section 194N, which is for withdrawal case, as section 194Q, which is for purchase of goods more than 50 lakh, etc. But majority is on income arise cases. Now, advance tax applicability. First of all, understand the advance tax applicability. When advance tax will be applicable on which person? So, if your estimated tax liability, if your estimated tax liability exceeding or more than 10,000. So government say if you are a person, whether individual, HUF, etc., and your estimated tax liability for this previous year, estimated, approximate, is going to exceed 10,000 or more, then that amount of tax, suppose it is 40,000 rupees, then we will not wait to collect this tax at the time of filing of your ITR. The total amount of tax, which is approximate 40,000 for this year, you have to deposit this tax amount in installment basis to us on certain date with certain specific installment. The first date is 15th of June 25. The second date would be 15th of September 25. Then the third date is 15th of December 25. And the last date would have been 15th of March 26. So my previous year is going to end on 31st March 26. So before the end of the previous year, on these certain dates, you have to deposit a certain amount of your estimated tax liability. Like on this first date is 15%. Second is 45%, 3 times of this. Then 75%, and then on 15th March, 100%. So if your advance tax liability is exceeding this, then you have to deposit your tax accordingly. This is not applicable only in case of senior citizen. Those do not have no business income. So if you are a senior citizen and you do not have any business income, then whatever your estimate tax liability, there is no requirement of deposit of advance tax. You can pay your tax at the time of filing of return. If you are a senior citizen but having business income, then TDS provision, advance tax provision is going to applicable upon you. So how it will work, let me tell you. It's a simple process. There's no new provision we are discussing. It's a simple provision, a process. And what we need to do, we just need to know how to calculate tax. So if you know how to calculate tax as per slab rate, etc., then you are able to find out the advance tax liability very easily. Now take an example, a simple example, basic example we are discussing. Suppose this Mr. A, he wants to know his advance tax liability or whether advance tax provision is applicable upon him or not. So first of all, what we need to do for previous year 25-26, the first date is 15th of June 2025. So on 15th June 2025, you can suppose yourself as Mr. A. If you are Mr. A, you have to find out on 15th June 2025 what you need to estimate. You need to estimate on 15th June 2025 that what would be your full year income. Listen very carefully. You need not to calculate your income up to 15th June. Only 2.5 months has been passed. April, May and 15 days of June. So only practically 2.5 months has been passed on for this previous year. But on the basis of these 2.5 months data, we have to calculate our estimated income for full year. That's why the name is estimated income. So I have to calculate my estimated income of full year 25-26 on the basis of this 2.5 months actual data. Understand? Can we do this? Yes. If I'm a salary person, on the basis of 2.5 months my salary, I can calculate it is what should be my 12-month salary, what would be my deduction, what would be my other interest income, etc. It is estimated basis. So whatever data I have for 2.5 months, according and depending upon that data, I have to calculate my full year income. So understand it very carefully. We are not going to calculate income of 2.5 months on the basis of 2.5 months data. We have to calculate our full year income. So suppose my salary is 1 lakh rupees per month, or suppose it's 1.5 lakh rupees per month. So after 2.5 months, I will calculate, okay, total year salary would be 18 lakh. My interest income for 2.5 months is like suppose 20,000. So according to it, it would be that much amount. My investment within 2.5 months is this month. So I can claim these deductions. So whatever is for 2.5 months actual data, on the basis of that, you can forecast, you can estimate your future income. In the same way as a student, if I'll ask you according to your current situation, how many marks you will be able to get in your CA examination. So there would be a probability that you might feel, okay, fine, till today, whatever I have completed, according to it, for next 2 or 3 months, I will revise my this chapter, I will revise my syllabus. So according to it, after at the time of examination, on the basis of today's data, whatever preparation you have done, on the basis of that situation, you can estimate your marks. Okay, I can get 65 marks in tax, suppose. So this is what we are doing. It is estimation. It may be more than 65. It may be less than 65. It could be anything. So the best thing is this. It is estimation. 40 marks. Okay, good. So the best thing, practically it is difficult for me, because if my client came to me and asked me to calculate his estimated tax liability, I need to collect a lot of data from him. Okay, what is your other income? What is your capital gain? What is your share investment? What is your deductions? House property income, business, etc. But from the point of view of examination, that is not that difficult, because in the examination, this estimated income would be given in the question. After 2.5 months, there would be written that as per Mr. A, he will have estimated income of suppose 20 lakh rupees. After 2.5 months, he estimated his income is 20 lakh. This would be given in the examination. So you need not to bother about it. Okay. What you need to bother? You should know how to calculate tax. Now you suppose this is 20 lakh rupees normal total income. And now you need to calculate tax on it. So for the purpose of practical situation, estimation is difficult. But for the purpose of examination, you consider this estimated income as the actual income. How does it matter? On this 20 lakh, you calculate tax. So you should know how to calculate tax on income. This is the main thing. So suppose the tax on this 20 lakh, suppose the tax on this 20 lakh as per suppose optional tax regime would be somewhere like 4 lakh 50,000 approximate. Okay? With education cess, etc. We are considering is 4 lakh 50,000. And because it is exceeding 10,000, so there would be advanced tax liability. The first date advanced tax liability is 15% of your tax. So on 15th of June, we have to deposit 15% of 4,50,000 as our advance tax liability. So this would be advance tax liability amount 67,500. Clear? So if the question asks you to calculate estimated advance tax liability on 15th June, the answer would be 67,500. So Mr. A needs to deposit up to 15th June 25, 67,500. Now again, the second date has been fixed 15th September 25. Now again, now we will have 5.5 months actual data, because April, May, June, July, August, June, July, August, and 5.5 months actual data we have. Now after 3 months, that means after June, now we are in September. So after 3 months, income tax wants to estimate again. Now give me an answer. Would after 3 months the income estimation what we have taken on 15th of June should be equal 20 lakh? It could be change also. Mr. Harivansh is asking how to calculate estimated tax after 2.5 months in real field purpose. I will ask my client. He will give me data of 2.5 months. According to, on the basis of that data, I will estimate what would be the income of 12 months. And on that 12 months, I will apply the tax rate, slab rate, normal rates, whatever we already have. Accordingly, I will find out the tax liability. Dhanlakshmi is saying yes, can be changed. Jinjit is saying no change, income may change. Okay, after 1 month, suppose Abhi, some student says that he can get 40 marks in tax on the basis of today's situation. And of course, this is applicable on all of the students. Somebody may be thinking 50, 60, 30, 25 could be. So after 1 month, if I'll ask you again this question, what marks you can obtain in tax? So that could be change also, and might be no change also. But in the examination, the examiner will definitely going to change it, because that would be a calculation you need to make. Otherwise, that would be really simple. But it could be both things. It could be written that it is same. It could be change also. Suppose we are saying that after 3 months, the estimate comes to 15 lakh only. There is some loss arise in the business, some order cancel. It could be plus, it could be minus, it could remain the same. Now on 15 lakh, we have to calculate our tax again. On 15 lakh, there would be 150 almost. Suppose the tax liability now 2,75,000. So again, this would be given in the question again. You need not to bother. And on this value, now tax liability, advance tax required to deposit is 3 times of this value, that is 45%. So now my advance tax liability on this date would be 123,750. But out of this, I have already deposited. If I have deposited 67,500, if I have paid this value in the earlier installment, then only I need to deposit 56,250. This value would be my advance tax liability on this date. If I have deposited it, suppose if I did not deposit this amount at this date, so there would be interest applicable, and then the tax liability deposit will be zero. So total 123,750 I need to deposit. Whatever you have deposited need to be reduced, because this 45% include 15% in it. So whatever you have deposited in first date need to be reduced in the next installment. Clear? Now again, third date would be 15th December 25. Now I have 8.5 months actual data. An estimation would be only for 3.5 months left. So my estimation would be more better. In every next installment, estimation would be more accurate, because now we have actual data more than. In first installment, I have only 2.5 months actual data. So estimate would be very volatile. Then 5.5 months data. Estimate would be better than the last estimates. Now I have 8.5 months actual data, only 3.5 months I have to estimate. So it would be better than the second situation. Now suppose the estimate income 18 lakh, business income. Suppose long-term capital gain is 2 lakh. Casual income is suppose 1 lakh. So these two new income arises. Earlier these were all PGBP income. No other income. So if now my income 21 lakh. Now in December, what we need to do, we need to calculate tax accordingly. Now on 18 lakh would be slab rate there. Now in this 2 lakh, the rate would be suppose 12.5% there. Now on casual income, the rate of tax is 30%. So accordingly, now I have to calculate my tax. So suppose the tax liability, considering all kind of tax structure, that would be suppose 5,60,000. This is not actual tax, students. Remember again, this is approximate tax, whatever I am taking. So suppose now the tax is 560 for the year on considering all kind of rates. And now we have to deposit 75% of it. On the third installment, our tax liability would be 75%. That would come 4,20,000. Out of this, suppose we have deposit first installment of 67,500. Suppose second installment 56250. So now that would be my advance tax liability arise over here. That would be 296,250. This need to be deposited. Now the last date, that is 15th of March 2026. Now you have data of almost 11.5 months actual data. You just need to estimate 15 days of your income. So this would be the most accurate or almost the same data of my income, except those 15 days future estimate I need to make. So this is like the time of examination is there. So that would be the better position. You will tell that actually I can score this much of marks. Okay. So suppose now estimate income, business income suppose goes down to 14 lakh. Capital gain is 2 lakh still, casual income is 1, and suppose the tax liability is now 4,90,000. Need to deposit full 100% now. 490, whatever you have deposited, 67,500, 56,250, 296. 250 you have deposited. So balance is now 70,000. This will be the last advance tax liability. You have to deposit it on 15th March 2026. So in advance tax, the good thing, the estimate income would be given in the question. Your work is just to calculate the correct tax. You should remember the percentage of advance tax what we need to pay. If you deposit all the advance tax liability on the specific date, there would not be any interest. Suppose if you deposit less, fine. Requirement of deposit was 60,000. You deposit only 20,000. Suppose. So the difference, if there is any shortfall, in deposit, like this difference is 47,500, then you need to pay interest on it under section 234C. That we will discuss later. But if there is any shortfall, then you have to pay interest on it. So fine. First of all, understand the advance tax process. So this is the advance tax process. So advance tax liability would be arise on the basis of your estimation. So your income would be most accurate at the time of last installment. Understood? Is advance tax is mandatory? Yes. If the estimated tax liability is more than 10,000, then it is yes. Suppose someone income estimated tax liability is less than 10,000, then there would not be any advance tax at that date of installment. Clear? Now we are discussing the advance tax provision. So now you understand what exactly we have to do in this. Okay, let me so there are specific date you can see 15% on or before 15 June, 45% on or before 15 September, 75% on or before December 15, and 100% on or before 15th of March. Let's go with the provision. Liability for payment of advance tax. Tax shall be payable in advance during any financial year in accordance with the provision of section 208 to 219 in respect of assessee current income, the total income of the assessee which would be chargeable to tax. Section 208 say obligation to pay advance tax arise in every case where the advance tax is 10,000 or more. An assessee who is liable to pay advance tax of less than 10,000 will not be settled with interest under section 234B and C for defaults in payment of advance tax. So if your tax liability is less than 10,000, then there is no requirement of advance tax payment. So that's why you do not need to pay any interest under section 234B and C. But yes, interest section 234A could be applicable. 234A would be discussed in chapter 8. 234A did not connected with advance tax liability. It is connected with late return filing. So that's why it says that B and C would not be applicable, but A could be applicable. Of course, because A do not have any connection with the advance tax provision. That is for interest for belated filing of return. So this is the topic of chapter number 8. Now the exception or the exemption is for senior citizen who have passive source of income. Passive means do not have any direct source of income like business. The payment of advance tax cause genuine compliance is hardship. Therefore, in order to reduce advance tax provided a resident individual not having any income chargeable under PGBP head, and if 60 year or more, then need not to pay advance tax, etc. Computation of advance tax. An assessee has to, everything is based on your estimates, and pay advance tax thereon. He need not to submit any estimate or statement to the income tax officer. When an obligation to pay advance tax has arisen, the assessee shall himself compute the advance tax payable on his current income at the rates in force. In the case of a person who has been already assessed by way of a regular assessment in respect of total income of any previous year, the assessing officer, if he has of the opinion such person is liable to pay advance tax and serve an order under Section 210 to pay advance tax. These are normal points. You can go through it. Where the advance tax payable by assessee estimate is higher, etc. Normal provision. The installment dates and amount is very, very relevant. Common advance tax payment schedule for both corporates and non-corporates other than assessee computing profit on presumptive basis under Section 44 AD1 or ADA1. So these dates of 15 June, September, December, March is applicable, and the percentage for all assessee except those fall under presumptive taxation scheme of Section 44 AD and 44 ADA. So you might be thinking they are exempted from advance tax provision. No, it is not so. For Section 44 AD and 44 ADA, the compliances is easy. They do not need to deposit anything on 15th of June. No advance tax deposit to on 15th of September, December. Only this is required. So if you are an assessee who do fall under Section 44 AD or 44 ADA, then only on the last date of 15th March 2026, you has to estimate your income and need to deposit the whole amount 100% on single date. So they need to just calculate once in a year. For other assessee, we have to calculate 4 times in a year. Any payment of tax. Look, the last date is 15th of March for payment of advance tax. But government relaxed the provision. It says any amount of tax by way of advance tax on or before 31st March. So even after you pay that advance tax after 15th March up to 31st March, that would be taxed as, that would be treated as advance tax paid during each financial year ending on 31st March. So after 15th March till 31st March, if any payment deposited by to you, that will also be treated as advance tax. So this is the concept has been explained for Section 44 AD and ADA, that they only have one installment to pay, and that would be 15th of March. Again, anything paid by themselves, by them up to 31st of March would be again treated as payment of advance tax. If the last day bank holidays, then you can pay on the next day. Whatever advance tax you will pay, you can get the credit same as in case of TDS. Now 234B and 234C interest we have to discuss. 234B and 234C we will discuss with an example. So that would be really helpful for you to understand the concept. Correct. So 234B and C is left only in advanced tax part. We will discuss it with the help of example. Let me see if there's any query. If actual tax liability is less than advance tax paid, so we will get the refund. Yes, exactly, Mr. Neeraj. It's just like TDS. Suppose advance tax we have deposited. I will give you a short example of it. Well, interest is applicable while making 31st March 3, 2026. Dhanlakshmi, we are going to solve a question of advance tax with interest provision to 34B and C just after this conversation. So you will find it out how interest is going to be applicable. But before that, what would be the treatment of the credit of advance tax? Let me show you. There is possibility. Of course, there is a possibility. Suppose on 15th of March, sorry, 15th of June, someone estimated tax liability or estimated income, we can say, estimated income was 10 lakh rupees under optional tax regime. So the tax on this would be 1,12,500 and advance tax liability would be 15%. So he deposited 15% of this. 16,875. He paid advance tax. Suppose on 15th of September, due to order cancellation, due to any other reason, due to anything, now his estimated income, suppose only 4 lakh rupees of the year. So there would be no tax. Up to 5 lakh, there would not be any tax. There would not be any advance tax liability because 45% of this we need to calculate. And that would be not applicable. But we have already paid advance tax 16875. On third and on fourth date, the condition remains the same. So he has paid 16875 at the time of filing of his return of income. His final income is 4 lakh rupees. So the tax liability would be zero. Whatever you have paid as advance tax or TDS or TCS, you can claim at the time of filing of return. So whatever he has paid, he can claim it as a refund as we do in case of TDS also. Clear? Mr. Diyajan is saying 44 AD, ADA if having another income. Yes. Diya, in case of you are carrying on a business under section 44 AD or ADA, the liabilities to calculate your estimated income is on 15th of March. So on 15th of March, if you have business income as well as other income, etc., everything needs to be considered and normal tax calculation need to be made. It's just not that we are only need to consider presumptive income. We have to consider all the incomes over there. Okay, Mustafa is saying, sir, can you say when we used to revise of DT, which chapter sequence to do with and what type of question to solve it? You have to revise it from chapter 1, 2, 3, 4, 5, 6 in that sequence. But if you're asking me about the classes I have talked about on 5th and 6th, so first of all, you have to revise basic concept topics regarding to tax structure, then PGBP and capital gain, because the most of the provisions of these topic needs to be discussed in chapter number 9, Mustafa. Okay. So now I'm going to solve a question of 234B and C interest with advanced tax. So that will definitely going to help you to understand the provision advanced tax and interest in a go. So suppose I've already made this question. So the calculation time we will say, suppose there's an optional tax regime we are opting on 15th of June 2025. Suppose the estimated total income, let me tell you again, estimated total income would be given in the question. The net profit of business has been given 15 lakh and the interest income for the full year we are estimating. Okay, for the full year, the 15 lakh would be the interest income. So my total income is 16 lakh rupees. Now, as per slab, estimated tax on this 16 lakh would be approximate. This would be, I guess, correct calculation I have made. You can recheck it later. 190 to 500, then cess would be 11,700. Let me tell you again, normal tax calculation you have to do. Cess, surcharge, rebate, whatever is applicable, you have to assume that this is your total income. Now need to calculate tax upon it. So this is 3 lakh 4,200. And because it is exceeding 10,000, so advance tax liability would arise on this date. And advance tax liability percentage would be 15%. So this will consider the advance tax liability in amount form is 45630. Now suppose advance tax actually paid is 30,000. Now the problem arises. So whatever would be your advance tax liability on a specific date, as in this case, it is 45630. And if advance tax not paid completely, then the difference, that is 15,630, you have to pay interest under section 234C. So we are discussing example of advance tax as well as section 234B interest as well as 234C interest combinedly. So 234C is applicable. 234B we will check after all the installment we have paid. 234C need to be checked on each installment and B need to be checked after all installment paid. So this is on each installment interest. So that's why we have to calculate 234C on each interest. The rate of interest is 1% per month. And for 3 months, it will be applicable directly. So technically, fixed it's 3% rate you have to apply on all the differences you have. It's 1% per month. Now 1% per month is on 15th of June. So till next date, you have to apply 1% per month. So after June, the next date would be in September. So 15 June, July, August, September. It will be always fixed 3%. Fixed 3%. Not per month. 1% is per month, and because the next installment would be always after 3 months. So automatically it would be 3% in all the cases. So accordingly, you will have 469 rupees interest value. Take 234C interest. This is on first installment. Now, second, on 15th of September 2025, now my estimated total income goes to, it has changed. Net profit is 12 lakh. Interest income is 1 lakh. Short-term capital gain with 20% rate is 1 lakh. So my aggregate tax now is 2,31,400 rupees after cess, etc. Now again on this date, the estimated tax is more than 10,000. Suppose in any case, this 2,31,000, suppose only 8,000 due to loss. Suppose on 15th of September, suppose the estimated tax is 8,000 rupees. Then what will happen? On this date, because it's less than 10,000, so there would not be any advance tax requirement to be paid on this second installment. Then we will check in the third installment. So if in any installment date, if this is not exceeding 10,000, this value, then you need not to follow advance tax provision for that particular date. We have to go for the next installment date. But because this is higher than 10,000, of course, it would be applicable. 45% of this. So 104130. Now we do need to deposit this, but actually we deposit only this value. So only this is going to be reduced for the purpose of balance advance tax need to be deposited. This is 74130 we have to deposit. And assume we have deposited the full value on this date, 74130. So there is no shortfall. There would not be any interest on second installment. Understood? Now moving on to third. On 15th December 25, suppose the net profit has increased to 20 lakh as per our estimation. Interest remain the same and short-term capital gain remain the same. So now my tax would be 4,81,000. 75% would be the estimated tax liability. That would be 360,750. And we have paid 30,000 in first case and 74130 in second case. So now my liability is 256620. If I deposited full 256620, there would not be any 234C interest. But suppose we have deposited only 2 lakh rupees. So how much is the shortfall? The shortfall is 56620. 1% per month, but fixed percentage 3% would be applicable. So that would be 1699. Now the last, the fourth date of installment, 15th of March 2026. Now suppose the estimated income remains the same. So my tax liability again would remain the same. Now the deposit liability is 100%, which would be 481, out of which we have deposited 30,000. We have deposited 74130 and we have deposited 2 lakh rupees. So now we have remaining is 1,76,870. If we deposit full value, no interest to 34C on this date, but suppose we have deposited only 1 lakh rupees. So now 76 and 870 is the shortfall. And remember carefully, On the last installment, if there is a shortfall, there would be only 1% interest applicability, not 3%. And it's very logical because if you default in this stage, so the next installment the time is after 3 months. So 1% per month total would be 3%. This is my last installment of 15th of March of the year. Now, if you do default on this date of payment, the remaining days are 15 days and the rate is 1% per month or part of the month. If you want to read the exact rate which has been given in the notes, it's 1% per month or part of the month. So part of the month means if even a single day default, we will consider it as a month. So now the default is only for 15 days because 15th March you have to deposit and now you did not deposit the full value. So default is only till 31st March need to calculate it. So it is only 15 days and 15 days would be considered only as a single month. So only 1% rate would be applicable at the last installment. The total interest 234C you have to pay, that would be 2937. So you can calculate the interest under section 234C with the solution of advanced tax calculation. Side by side, you can calculate the solution of 234C. But we have left with 234B calculation. Once we will calculate 234B, then we will move for our story time. So now 234B interest applicability needs to be checked only after 15th March provision. Before that, let me tell you, if you are section 44AD or 44ADA category, so for those only fourth installment needs to be paid at a once. So for those 234C need to be calculated only on 15th March 2026. So 234C calculation for these presumptive taxation scheme person would be on 15th March 26. So if the amount is short, 1% interest need to be calculated. Clear? Okay, so moving on to 234B. Now 234B says, listen very carefully, if total advance tax is less than 90% of assessed tax, or you can say actual tax liability. So if whatever advance tax you have deposited is less than 90% of the assessed tax, then 234B interest need to be applicable. Now, can you tell me in this example, what should I consider as an assessed tax? In this example, what we can consider as an assessed tax? Who will give me the answer? Sir, in fourth, how take 20,000? Are you talking about Aditya? This 20,000 is not 2 lakh. It's not 20, it's 2 lakh because we have deposited 2 lakh rupees in the third installment. So we need to reduce all the amount we have paid. First is 30,000. Second, we have paid 74320, sorry. And on third, in this time, we have out of 256, we paid 2 lakh rupees. So this is my third. This is first, second, this is third. So what is the assessed tax? Diya is saying 481, Jayendra is saying 481, Dhanlakshmi is saying 176870. Anyone else? What would be the assessed tax? The assessed tax means the total tax. This is technically, in this example, this would be our assessed tax. So 481 would be the assessed tax. Now, can you tell me how much advance tax we have deposited total? How much total advance tax we have deposited? And you can see this one, 30,000 plus 74,130 plus 2 lakh and plus 1 lakh rupees. So total advance tax deposited by us would be 3 lakh plus 30,000 plus 74130. So total advance tax we have deposited 404130. Understand? Now we need to check the condition whether 234B is applicable or not. If advance tax is less than 90% of my assessed tax, so this is my assessed tax. So if the 90% of this at least should have been deposited as advance tax. So 90% of 4,81,000 would have been 4,32,900. So my advance tax should be at least 4,32,900, but the advance tax I deposit is less than 90% of. You can see it's less than 90% of my assessed tax. So 90% of assessed tax should be 432,900. So advance tax is less than 90% of assessed tax. So first of all, I have to check whether 234B interest would be applicable in this case or not. So the answer is yes, because my advance tax is less than 90% of assessed tax. Because 90% of assessed tax should have been 432,900. And advance tax deposit is only 4,41,030. 4,04,130. And please remember, you have to check this initially. Then you will realize that yes, advance tax is less than 90%, so 234B is applicable. Suppose my advance tax is 4,35,000. Then there would not be any 234B applicable. But in this case, 234B is apply. Clear? Now for the purpose of 234B, we have to find out the rate of interest is again same 1% per month or part of the month. Clear? On which amount this interest is going to be applicable? So the amount on which interest need to be applied would be total assessed tax. This is simple. Less advance tax paid on this difference. Now the third and the most interesting part is the time duration. Like in 234C, we have a specific percentage, 3%, 3%, 3%, and 1%, fixed rate. But in case of 234B, the interest calculation time is different. It says interest will be calculated always from fixed date 1st April 2026 till advance tax shortfall paid as set or assessment under section 133(1) as the case. So this date would be given in the question, the date of payment of shortfall or 143(1). Suppose in the example, the date of shortfall which has been paid or 143(1) assessment has been completed on 10th November 2026. So now this is the duration for which advance tax need to be charged on the difference of this value, 4,81,000 assessed tax, which was 481, less advance tax paid, that is 404,130. On this difference, 1% per month would be applicable from April till November. So April, May, June, July, August, September, October, and November. 3, 4, 5, 6. 8 months interest need to be charged at the rate 1%. So that means 8% need to be charged on the difference. That would be 234B interest. So for the calculation of 234B interest, first of all, you have to check whether the advance tax paid is less than 90% of assessed tax. If the answer is yes, only then 234B would be applicable with this specific percentage and time duration. Time duration is very crucial. It would be always start from 1st April 26 because the provision says from the first day of assessment year, the time should be started and it would be end at the time of 143(1) intimation or the tax has been paid at full. I hope it's clear. We will solve one more question of advanced tax because today we just go through with a lot of provision of TDS as well as advanced tax, and we also solve the question. So it might be little messy, but when we will solve one more question after when you will revise this provision today, that would be really easy. So tomorrow we will also going to solve one more question of 234B and C and one more interesting fact also. Under section 234C, a very interesting note we will discuss tomorrow because if today we will discuss, it would be really messy. So if there is any query, student, you can ask. Then we move on to a small short story. Why 8%? Who is asking? Navneet Maurya is asking why 8%? Because we have need to find out the default time duration from April till November. How many months? 8 months. April, May, June, July, August, September, October, November. So 8-month default is there. And for every month, 1% interest rate need to be applicable. So it is 1% per month. So for 8 months, it would be 8% rate applicability. That's why it's 8%, Navneet. Anything else? Clear. Okay. Any more query, students? Because we are Harivansh is asking why 1% the last month, the difference is 3 months. Why not 3%? Harivansh, in the last 15th of March, if you will say, na, you are asking about 234C. So in 234C, the last date is 15th of March 2026. And if you default in that depositing of amount of advance tax, so the last day of previous year ending is 31st March. So from 15th March was the due date technically, and you defaulted it. So the year would be ending 31st March. Only 15 days default. It is less than 1 month. So only 1 month interest need to be calculated on the last installment default, 1%. Kuldeep is saying, is it material that paid on 1st November or 30? Good question. No, because 1% per month or part of the month. So whether you pay on 1st of November or 30th of November, the November month interest would be automatically considered. Neeraj is saying, is Income Tax Act 25 is applicable for September 26 attempt? We are discussing Income Tax Act 2025. Yes, it is applicable, of course. Kuldeep is saying for interest calculation for 44 AD and 44 ADA, when advance tax paid before 31st March 26, then no interest is charged or not. If it is defaulted, if it is not paid up to 15th of March, the interest would be applicable there. Oh, I have to do it myself, so I will better understand, but most of it I understand. Once you will revise, look what is happening. I have explained this earlier also. When we are going through any numerical topic with theoretical provision, you will be able to understand the correct provision once you will revise it, and then when we will solve the practical questions. So if today you are feeling that 234 BEC and advanced tax provisions are difficult, let me tell you, when tomorrow we will solve another question of 234 BC interest, when or if you have revised provision once today, you will feel that it's just a simple calculation of 15%, 45%, 75%, 30%. That's it. Nothing difficult in this. You can find it out tomorrow, this thing. Any more queries, students? I guess story का time निकल गया है, काफी late हो गया है, but If you want, so I can tell you a small story within a 2 or 3 minutes. Or if you are, we have already took a lot of time today. स्टोरी सुननी है धनलक्ष्मी को, चलो फटाफट से सुनते हैं। अच्छी सी स्टोरी, बहुत अच्छी सी। एक स्कूल था, वहां एक बच्ची को रेस के लिए दौड़ना था, और उसके पापा ने उसको प्रॉमिस किया था कि अगर उसने पापा से कहा था कि अगर मैं फर्स्ट आई तो आप मुझे ये टॉय दिलवाओगे, आइसक्रीम खिलाओगे, एटसेट्रा। उसके पापा ने कहा ओके डन, इफ यू विन आई विल गिव यू दिस थिंग। जब रेस हुई, 10 बच्चों की रेस थी, उसमें वो गर्ल जो थी वो 5th नंबर पर आई। 5th नंबर पर आई तो वो हार गई, तो उसको बड़ा दुख था कि मुझे आइसक्रीम और टॉय नहीं मिलेंगे। तो अपने पापा के पास गई, तो पापा ने कहा चलो भाई टॉय लेने चलते हैं और आइसक्रीम भी मिलेगी। तो उसने कहा क्यों, मैं तो फर्स्ट नहीं आई, मैं तो फेल हो गई एक तरह से। तो उसने कहा अरे तुम तो फर्स्ट आई हो। उसने कहा अरे मैं तो 5th आई हूँ। तो उनके फादर ने कहा नहीं, जो बाकी बच्चों से तुम आगे हो, जो तुमसे 5 बच्चे पीछे थे, तो उनके हिसाब से तो तुम फर्स्ट आए हो ना, उनसे आगे होना इज योर फर्स्ट। तो टेक्निकली तुम फर्स्ट आए हो, तो तुम फेल नहीं हो, तुम पास हो गए, बिकॉज तुमसे पीछे भी थे और तुम उनके लिए तुम फर्स्ट हो जो तुमसे पीछे थे। तो वहां एक बच्चा था जो 8th नंबर पे आया था, वो सुन रहा था। तो उसने कहा कि अंकल मतलब मैं फेल हो गया, मैं फर्स्ट नहीं आया ना। तो उन्होंने कहा नहीं नहीं, तुम भी फर्स्ट आए हो, बिकॉज तुमसे भी पीछे 2 बच्चे थे, तो यू आर ऑल्सो फर्स्ट फॉर देम। तो तुम भी फर्स्ट आए हो, तो तुम्हें भी डिमोरलाइज नहीं होना चाहिए। तो बच्चा जो 10th आया था, उसने कहा अच्छा अंकल मतलब मैं फेल हो गया। उसने कहा नहीं, तुम भी फेल नहीं हुए हो, तुम भी फर्स्ट आए हो। उसने कहा ये कैसे है, मैं तो 10th हूं। तो उसने कहा कि जो बच्चों ने पार्टिसिपेट किया था स्कूल में से 100 बच्चों ने उस टेस्ट के लिए, उस रेस के टेस्ट के लिए टेस्ट दिया था, उनमें से आप 10 सिलेक्ट हुए, तो तुम उन सारे बच्चों से जो सिलेक्ट नहीं हुए उनसे फर्स्ट आए हो। तो उसने कहा फिर फेल कौन हुआ है, वो जो बच्चे नहीं सिलेक्ट हुए क्या वो फेल हुए हैं? तो उसके पापा ने कहा नहीं, वो बच्चे सिर्फ फेल हुए हैं जिन्होंने या तो पार्टिसिपेट ही नहीं किया, जो 100 में भी नहीं सिलेक्ट हुए, जिन्होंने कहा कि नहीं हम ये कर ही नहीं सकते, हम इस रेस में सिलेक्ट ही नहीं, हम टॉप 10 में भी नहीं आ पाएंगे। एक तो वो बच्चे फेल हुए जिनकी ये मेंटेलिटी थी। दूसरे वो भी फेल हुए जो उस 100 में तो आए, लेकिन उन्होंने अपना फुल बेस्ट एफर्ट नहीं दिया। सिर्फ वो बच्चे फेल हुए जो ये सोचकर रेस में पार्टिसिपेट ही नहीं करा उस टेस्ट में कि हम उन 10 में आ ही नहीं पाएंगे, पहले से ही मान लिया कि हम नहीं कर सकते। और दूसरे वो जिन्होंने पार्टिसिपेट किया लेकिन अपना 100% नहीं दिया, प्रैक्टिस ही नहीं करी। इन द सेम केस इन दिस सीए प्रोफेशन, कोई बच्चा फेल नहीं होता अपने अटेम्प्ट में। अगर किसी का अटेम्प्ट नहीं निकला है तो वो फेल नहीं है, उसने कुछ ना कुछ लर्न किया है। सिर्फ वो बच्चा फेल है जो या तो ये सीए कोर्स ज्वाइन ही नहीं करता, वो बीकॉम करता है डर के वजह से कि मैं सीए कर ही नहीं सकता। तो एक तो वो फेल है इसके लिए हमेशा। दूसरा वो बच्चा फेल है जो सीए में आ तो रहा है लेकिन अपने दोस्तों के लिए, जो सीए करना नहीं चाहता मन से, जिसको लगता है ठीक है हो जाएगा तो कर लेंगे, इतना कोई जरूरी नहीं है, दोस्तों ने किया है कुछ ना कुछ तो करना है। तो वो जो अपना बेस्ट ही नहीं दे रहा, एक वो बच्चा फेल। जो अपना बेस्ट दे रहे हैं वो आज नहीं तो कल सीए बनेंगे। जो अपनी पूरी मेहनत कर रहे हैं वो सब पास हैं। एक अटेम्प्ट में नहीं निकलने से अगर आप नेक्स्ट अटेम्प्ट के लिए कोशिश करोगे, यू विल लर्न समथिंग फ्रॉम योर फेलियर। सो नेक्स्ट अटेम्प्ट में मे बी यू विल क्लियर इट एंड यू विल बी पास डेफिनेटली। सो सिर्फ वो बच्चे फेल होते हैं जो या तो ट्राई नहीं करते, या जो ट्राई करते हैं लेकिन अपना बेस्ट नहीं देते। तो इफ यू गिव योर बेस्ट यू विल नेवर फेल, you will never feel like a fail. So that's why we could be unsuccessful in an attempt, but we cannot be fail, because one day definitely you will be a chartered accountant. So please try hard and we will see each other tomorrow. And please revise the provision once so you will be understand TDS provision in a more detailed way. So have a very good day. So Nisarg can we close the session? Thank you, Nisarg. Good day.